And the equities market on Monday, the banking sector dragged the market into the red, leading to a bearish start of the week for the market. Let's get the facts and figures from my colleague there at the Stock Exchange, Temple Ashaju. Hello, Temple. Good morning. Well, short-term investors couldn't wait to take profit on the banking stocks that saw major gains last week, right?
Correct, Chimaze. I mean, that's because money you don't let them sleep actually. So you've seen some gains, you've seen some profit. You just have to grab and move on. So that's the sense we saw yesterday in the markets, as we saw a pullback from the 13 trillion naira mark that we saw the equity capitalization of the market. Now dipping back to 12.882 trillion naira, and that sentiment is not likely to change today. We're still going to possibly see some investors taking profits today because again, the gains that we raked in last week, 200, about 260 billion naira last week alone. Come on, you have to let some investors actually take their profits. So this session was largely dominated by that level of action, and of course we saw investors sell down on some of the counters that recorded significant price appreciation the previous week. But of course, if you look at the market breadth, that also closed positive and explains the fact that investors have continued to buy more. There's still more demand in the market. We saw some 16 gainers versus 15 decliners yesterday in the market. And if you look at the activity level of the market, transactions for yesterday alone diminished significantly, even though we saw this level of gainers, which explains, or market breadth, which explains the positive sentiment of investors in the market. We saw total volume and value traded for yesterday dipping by some 34%. That's for volume, and of course by some 54.6% for the value of the transactions that we saw yesterday, which is put at 2.53 billion naira. In total, look at the number of deals. It's 4,609, and of course we saw trades. Huge level of trade on the likes of UACN, Zenith Bank, which is a major target for a lot of investors. Dangote Cement also. These three, if you put together, accounted for 54.51% of the total turnover that we saw in the markets yesterday alone. You talked earlier, Chimeze, about the banking sector being the major drag for the market, and of course you're correct. It was down by some 2%. Axis Bank, which is a counter that touched 11 naira on Friday, saw a real profit taking on Monday as we commenced the week. It was down by 6.67%. ETI, which is Ecobank Transnational Incorporated, was also down by about the same margin, 6.67%, and Zenith Bank was down by 8 basis points yesterday alone. But if you look at consumer goods, that was positive, some 42 basis points. You got Okomo Oil contributing so that's particular performance in the market. Industrial goods side of the market was positive in spite of the decline that we saw on Dangote Cement. Insurance was also, mildly positive, but oil and gas continue to be negative. The only company that we should also recognize for its contribution to the gains we saw in the market yesterday was Names International, which went on bid because again we saw some profits, some cross dealing rather on this particular company. Some 500 units of its shares, traded yesterday on cross dealing, and it was up some 10%. That reduced its year-to-date negative performance all the way from 48% to 43.59%. Chimeze.
All right, thank you, Tempo. And from equities, we'll look at the commodities market. And today on our commodities market update, we are looking at steel, as Nigeria remains a fringe player in the global production of this commodity. Well, I guess you have Adimo Kwesa, Financial Derivatives Company, and you have him there to tell us the potentials inherent in this particular commodities. Tempo.
All right, thank you again, Chimeze. Well, Adim, thanks a great deal for joining us on the show this morning. So top on the radar at this point, first, of course, is the burning economic issues and inflation numbers we understand came out yesterday. Folks at your firm have actually digested this. Can you give us a sense of what we know about those inflation reports?
Yeah, it's still the talk of the town because, the direction was expected, but I think the magnitude of the increase came as a surprise. We saw inflation jump from 11.27% to 11.61% food inflation, as expected, was the main driver of inflation. And what's worrying is that month-on-month food inflation is the highest in over 20 years, because even when we factor in seasonal factors, because this is the time of the harvest was good, but yet we still saw food prices rise, food inflation shoot up. So the only reason is supply shortages emanating from the border closure, or simply put, goods that have normally been smuggled to compensate for the shortfall in agricultural production. That's no more. So that's why we're seeing food prices rise higher. But at the same time, you're seeing PMS prices go down because of the effect of the border closure. So there are arguments for and against the border closure. So you don't know which, it's hard to quantify the net positive or net negative, but you can see that the border closure is having some positive effects. PMS prices are down, but negative effect because food prices are going up.
So the Food and Agriculture Organization had actually predicted, or has even released their numbers and said food inflation was 5.7%. The expected uptick around rice, dairy products, and I think oil or thereabout. But how did all that reflect in these numbers that we got?
Yes, indeed. Yeah, we saw the highest prices were like the products that rose the highest were products you just mentioned: food, dairy, rice, chicken, meats. Those kind of products rose the highest. But at the same time, we expect those products to rise. That's one of our those products to decline. The prices of those products to decline in the near term, because that's one of the beauties of supply and demand. Yes, demand, the border has been closed. Local producers are now being encouraged to produce rice. So that increase in supply should have a downward effect on prices. And of course, I think there are talks that Nigeria, Niger Republic, Benin Republic are setting up a committee to increase scrutiny on cross-border trade, so that which will eventually allow for the border to be reopened. So I think local producers are coming to increase production now while they can, and I think the effect in the next couple of weeks, we should see prices go down.
One area of interest to me on this issue of inflation is the fact that, it's inflation for the month of October, and we saw that at the investor and exporter window markets, we saw that foreign exchange, Naira to the US dollar, was actually quite stable. I think some 0.03%. Did that play any significant role to moderate the increase in the inflation or CPI at this point?
Yes, indeed, that played a very important role, because we saw one important trend. We saw that all inflation subcategories, apart from core inflation, increased. Core inflation declined in October, and that, as a result, is one of the reasons, like you said, was the stable exchange rate. Exchange rate has been stable at 360, 362, depending on which markets you're talking to. Yes, so those rates have been very stable, and that's contributed to the decline in core inflation. And also PMS, the fact that petroleum products prices are also down, that also contributed to the decline in core inflation.
So if we had seen a shift, then it could have been worse than this.
Exactly.
So thanks to Godwin Emefiele in that regard. Let's move to the commodity in focus. You're talking about steel. I'm wondering why steel is actually a major area of focus at this point.
Yes, steel is very important. Yeah, Nigeria has long had ambitions to have a very vibrant and healthy steel sector. The Ajauta steel plant is unfortunately the bad case. The government has invested billions of dollars, but to date, no production has come out from that steel plant. But I think the efforts that are underway to revive Nigeria's steel sectors are very encouraging. We're seeing mills set up across the country in states like Kogi, Kwara, and states like that. And also, there's these reports have also come out last week that Nigeria is considering banning steel imports, because we produce about 2 million tons of imports, and because of that we have to import about 1.27 billion worth of imports a year, steel imports a year, because steel is very critical to infrastructure development, for example. So we spend a lot of money to import steel, but efforts are underway to ban steel imports, and that's, in that case, that will be one of the commodities where I actually advocate for import restriction, because steel imports, Nigeria's steel industry is under threat from low-priced steel imports from countries like China. China heavily subsidizes their steel sector, because steel is a strategic sector to them, employs a lot of people. So We have the threat of low steel imports from China and also other countries which are bringing steel into this country and dumping steel into this country. So that's the fact that if you can ban steel imports, encourage local steel production, it's a very positive development. And of course, steel is very critical to the technological and industrial development of any country. So we need still a very vibrant steel sector if we want to become an industrialized nation. In fact, yes.
So you think the efforts of the federal government in bringing in the Russians and all of that will play a very important
Exactly,
role?
yes. Another good point you mentioned. Yeah, the efforts to also revive the Jakarta steel plant with the help of the Russians.
The agreement has been signed.
Yes, yes. So hopefully all that would come into play and hopefully we'll have a very vibrant and healthy steel sector.
Do you really think investors are really bullish on this agreement at this point in time? I mean, this is not the first time we're bringing in foreign investors. I think we've had Indians before. We've had folks from different parts.
Yeah, I think now more so because the price of steel is rising. The price of steel, because from 2010 to about 2017, the steel market was oversupplied. There was a glut of steel supply, mainly from China. China was the main culprit. But now prices are starting to rise in line with global economic growth. Prices are starting to rise gradually. Infrastructure construction efforts is kicking in industrial economy. So that in turn is driving the demand for steel.
But yesterday there's a decline.
There's a decline, but there are signs that prices would rise.
Shoot up again.
Yes, exactly.
That's why Nigeria is also plugging into this.
Exactly, yes.
So we've got other metrics, oil, and of course agriculture. What's the outlook as we go to?
Well, oil is being closely linked to this China and US trade talks.
Okay.
Last week, there was a bit of optimism that they will sign a deal. Now, I think investors are beginning to apply caution and logic that maybe these trade talks will be dragged on. Maybe a deal is not as imminent as... Even if a deal is being signed, it will just be cosmetics. They want to address the other issues such as currency manipulation.
This particular issue will continue to impact.
Exactly. So that's reality setting in. Exactly.
Adim, thanks a great deal for your insights.
Thank you.
Thanks a million. We appreciate your thoughts here. Back to you, Chimuze.
All right, thank you, Temple. Well, that conversation with Adim on steel and, of course, the need for Nigeria to perhaps restrict importation there will lead us into our next conversation on non-oil export, and that will be after the break. Do stay with us.